Hey traders, Christopher Mullen from thetechnicaltraders.com. Want to show you a little trick I use with Fibonacci extensions. I pretty much use it exclusively to find targets. I've refined it. There's all kinds of ways to use Fibonacci. I've refined it down to really just one technique, two techniques that work the best way and give you the best targets for going forward. I'm going to walk you through what they are, what they have been on gold, and where they are now. So here is the price of gold back in September 2018 going into mid last year. We had this big bottom form, and then we had this huge bull market or this bull rally with a bull flag, and more or less has created this beautiful resistance trend line. This nice pattern gives us a place to drop the Fibonacci extension. Now if we were to drop the Fibonacci extension, we can go down here from this low. I don't always go from a spike low. There's a few techniques I use, but more or less you want at least kind of 2 bars to touch that level. So you go from there, and then you go to the high over here, and then you go back down to this low over here where a few bars have tagged. Now, more or less, you've got the rally up, the pullback, and it should give us our forward looking Fibonacci extension. Now, if we move forward here, you can see this 100% measured move. If we were to drag this forward in time, you can see we ended up tagging that move. So we ran up, pulled back, came up. Usually the way it works is if you hit the 618 and pull back or resistance near it, usually you almost always go up and hit that 100% measured move. And more or less this little hiccup here is really the halfway point for the second half of the move. And it's amazing how the markets work. Now, more or less we had this beautiful run. It hit our 100% measured move. And now we've got a point here to draw the next Fibonacci extension. We would take this low, we would take these highs over here, and then we take this low and we carry it forward. And if we were to move forward in time, you can see price ran up past the 618, continued to go, and more or less hit this next 100% measured move for gold right there. And then the market continued to consolidate, start to build a pattern. And what we're looking for now is to find the next standout low for us to take the next kind of big Fibonacci extension. If you look at the size of this pattern here, big run up, multi-month consolidation, another multi-month rally, and now we're into a multi-month consolidation. So we're starting to look for a bottom to get formed and more or less for a falling trend line to be broken, showing momentum is starting to shift to the upside. So more or less, it looks like we're starting to move higher. We're making some higher highs. We've broken this high over here. So we can grab the next Fibonacci extension target, which is we take this low from this previous run up, we go up to these highs, and then we bring it down to these lows over here, and it gives us our next upside target. The market goes up, more or less consolidated pretty far from the 618, but overall we're looking for this 100% measured move in the market. We'll just continue to pull this forward here. We're looking for this 100% measured move. We ended up hitting the 618, chopped through it. We got into virus noise. Market did consolidate quite a bit, but here we are now into this next 100% measured move. Now, if we go forward in time, now we're going to be looking for a new setup. And this brings us to the current market analysis where we are. We've had this beautiful run up. We're having a consolidation. We even had a minor consolidation here. And what we're looking for is a continuation pattern here. We're looking for this price to eventually start to show signs that it's moving higher, whether we break a falling trend line here, whether the market continues to trade lower and flag down more. Eventually, once it starts to turn up, we'll be able to draw the next Fibonacci extension target. Based on the current price analysis, if we grab the low up to this high and down to this low and carry it forward, we can get an idea roughly where gold could head next, which would be a big run up to the 2000 mark. So we've got the run up, we got this pullback, and then we could see it head all the way up to 2000 and start to hit some new highs. So that's kind of where the market is. The question is, how long is this going to consolidate? Is it going to flag out for a while? Is it going to continue to make some lower lows and eventually start to turn up and then start to take off? Or is this a high momentum pullback here and we see the second half of this move rip to the upside and go on to this target? So that's where we are in terms of gold. And it more or less brings us back to those 2011 highs. We go to the weekly chart and we zoom way back here, 2011. This 2000 target obviously is going to put us up at some new highs, and we're going to see we're going to break through this area. More or less our 618 target, the next level is right up at these tweezers, these upper candles where the market ran up, got sold off, and put in the all-time high there. So more or less, we're still looking bullish on metals. If you look at the weekly chart, you can see you got a run up, a bull flag, a run up, a bull flag, a run up. Hit some volatility with the virus, but ended up hitting our 100% measured move. And now it's struggling here, forming a little bit of a bull flag. The question is, does it become a multi-month bull flag and then go higher later? A lot like this one and this one over here, or is it going to really continue to blow off and take off with all the printing that's going on in the increase of fear in the market? Only time will tell, but overall, it's still in a bull market. It is near resistance, but the patterns are still very bullish, pointing to higher prices. Now, if we were to take a quick look over at bonds, bonds do the same. All charts do the same thing, but let me go back to the daily chart here for bonds. And let's just zoom out in bonds a bit here. More or less, we had a very significant low in the market in bonds. It ran up and formed a multi-month consolidation. If we were to throw a Fibonacci extension on there, we grab the low, we go up to this high, and then we go down to these lows and we carry it forward. You can see the market ran up. More or less, we were looking at this big bull flag. This is what we really like. We end up getting long right here. And bonds actually performed exceptionally well even when the stock market was rallying, and that is a sign that the stock market is getting close to a top. And we ended up catching this for a 21% move. We actually got out of our play right here on this day. It hit our 20% plus target, and then the next day we had a 10% blow off and reversal, and it crashed 20% after that. But more or less, same type of price action. You have the run up, you've got the Fibonacci pullback, and then you've got the 618, and then we had a blow off up to a 100% measured move. And that bonds move the same way. All these charts use Fibonacci, and hopefully that gives you a little bit of insight. I ran through it real quick, but the 618 and the 100% are the key levels I find that you can use repeatedly to find targets and kind of gun for maximum profits. I usually put my target levels just below those levels because a lot of times the market will come up and it'll get close to it and back off. And I'm not looking to get the 100% move. I'm looking to get out usually just a little bit below it. Certain commodities will stop or reverse at certain percentage gains. The index likes to more or less stall out and roll over at 10% gains. Bonds usually maxes out around this 20-25% gain. So overall, that's usually when you're going to be looking for a bigger pullback. So you don't want to hold things too long. When they're looking real good, it's usually a point to get out and let things kind of recalibrate. Anyways, that's it for now. Take care. Bye-bye.